Today on I'll Have You Know.
We're serially opportunistic, which means that we face opportunity with a very open mind. It is a constant reassessment almost on a daily basis, and we try to find the things that are needed in society that consumers are demanding.
Welcome back to I'll Have You Know. I'm your host, David Druglever, Rice Business Class of 2012. Man, time is flying. On the line here, we have Will Robertson. Will is a Rice Business Class of 2005. He's also the managing member of Quintana Infrastructure and Development and a panoply of board involvement. So he serves on the board of Tanawa Resource Holdings, the board of the Spirit Golf Association, as well as the Henderson Western Tour Foundation. God, that's a lot of syllables. Well, thanks for joining us today.
Well, David, thanks for having me. I do want to interrupt the program out of the chute and just say that I'll have you know that when Tim Okabayashi called me, he was a classmate of mine. That little old secret about Tim is he was the finest lacrosse player across the state of Texas in 1995. So I just wanted to insert that really quickly about our friend Tim.
I don't know a lot of lacrosse player. I mean, how steep or deep is the competition in the lacrosse domain in Texas in the mid 90s?
We don't need to get into details, but the stats are out there to find. You could fact check me all day long, but I will stand behind what I said.
I just need something to give Tim a hard time with. That's all.
Oh, totally.
Looking for ammo here. That's fantastic. No, thanks for getting ahead of the I'll have you know. I mean, the idea is to, really share the most about the experience of the alumni after graduation and try to get those pearls of wisdom or little known factoids. So thank you for putting that front and center right off the rip. And so, Will, just to give us a little color on who you are and how you've gotten to where you are today, would you care to give us a brief harbor cruise on your backgrounds, maybe where you're from, the focus areas in your career, why you went to Rice, and what you are really focused on today?
You bet. I was born and raised in Houston. Went to the University of Texas up in Austin. Worked at Merrill Lynch for 2 years doing investment banking within the energy and power practice. Then spent 2 years with the Cap Street Group here in Houston. They're a generalist private equity fund with a wonderful team. And then from 2003 to '05 is when I came back to Rice to do my MBA program. And for me, I felt long term I wanted to stay in Houston, and going to a first class private university with a long standing but emerging MBA program was really important to me because I knew I could stick with it and help shape it and obviously watch it grow and become a better program. But after business school, I joined Quintana Minerals Corporation, which is essentially our family's administration entity. And we mostly, through that, have been a family office investing into a variety of industries. I spent from '05 until about 2010 working for Quintana Energy Partners, which was a private equity institutional fund. And really, since 2011, I separated out to work for myself, building my own platform, so to speak, with a few partners. And so, since that time, Quintana Infrastructure Development has been really a fundless, deal by deal investment group. Investing in a variety of things, mostly tied to energy and power. But here in the last several years, increasingly expanding into other infrastructure, categories.
Thank you for that. That's a lot of resume bullets. And so, and then on top of all that, you're doing a lot of volunteer work and again serving on multiple boards here. And so, I think a bit later, I want to get into how you strategize and divest out your efforts and your energy. But for today, in your current role with Quintana, how do you define success and how do you structure your efforts? And I mean, what does that look like for you when you go about, as you were saying, looking deal by deal investments?
Sure, we it's a balancing act on obviously servicing and fiduciary stewardship for the partnerships that we manage. So Tanawa is one currently that we're still working on. It's a gas processing business that's got a helium extraction unit. And so that's the first and primary focus each day when I wake up. Our team is always on the prowl for new opportunities, and we don't have a dependable capital base. And so we have to be very judicious about how we focus on new things to do. And it's a constant, outreach for our network as far as finding, investment opportunities, and then doing the proper due diligence, and then ultimately rounding up family offices and institutions to come along our side to make the investment. So it requires a constant focus on what matters the most, and focusing on the key elements, whether the people side and who we want to partner with, or the business plan strategies that we think are sound or not. And we often toil with venture stage or development stage situations that require a lot of heavy lift as far as getting the right permits and commercial support. And that's where we find kind of our strike zone is there's many funds out there that focus on existing businesses, and quite frankly, the asset valuations for things like that can get out of hand as far as the way we were trying to make an investment return. And so it's just a balancing act of caring for what we've got and doing the right job for those things, along with finding new opportunities to strike out upon.
And in terms of those, the investments, and how has that evolved over the years? I'm trying to figure out the time frame here for what you're referencing at Quintana. You said 2011, working for yourselves, and eventually joining with Quintana. And so, how has that evolved over time? I'm sure your portfolio mix is zigging and zagging, and depending on the success of those equity investments, your strategy might shift. It seems like a very complex sort of calculus to do there. So can you help us understand how that evolves and matures over time, and what that go forward looks like?
I mean, we're serially opportunistic, which means that we face opportunity with a very open mind. And as you can imagine, energy, oil and gas activities have really been in a series of downdrafts since starting in 2015. So within energy, we've been fairly patient and not trying to get too aggressive on what to do and how to do it. Several years ago, we had an opportunity to participate in what's called the E-rate program amongst the federal government, and how they help subsidize building fiber for educational purposes. And so it really casted our eye onto other parallel industries such as data and tech infrastructure, and we see parallels with how assets can come to be as far as commercial support, and location is important. And so we are routinely we pivot to the things that we think are most attractive, and quite honestly, we try to find the ones that have tailwinds of support relative to the headwinds that some of the energy cyclicality presents itself. So it is a constant reassessment, almost on a daily basis, for what priorities that we should have. And we try to find the things that are needed in society that consumers are demanding. So for examples of this, we made a structured investment into a data center platform in the southeast that's essentially concentrating on secondary markets for edge type data centers. We are really working hard to close a fiber to the home opportunity in the outer skirts of Toronto here in the next few days or a week or so. So we find opportunities of different types all the time, and we try to select the ones that we think we can be most effective with.
I have a lot there. I mean, you operate in so many different domains. You obviously have the focus in oil and gas, and then you mentioned education, tech, and data centers. That's near and dear to my heart because I'm working for Splunk, so that's all all things data. And so, as I think about sort of putting your hat on and doing the market research, I mean, what is that? There's maybe 2 ways to ask this is, what does a good day look like, for Will Robertson as you're doing the due diligence and the market research? And then secondly, how deep do you go into getting well versed in all these various industries, which I'm assuming you're not an expert necessarily in, what building fiber for education looks like. You may talk to experts. So how do you bone up on those various industries so you can make a well-informed decision? And then how far along do you go in that spectrum from, how do you spell fiber to, here's, how you build all this stuff?
I think most everything that we focus on, it all starts with the people. Most of the ideas that come to us are from experts in their domain. And if there's a fit for the character and the value system of the entrepreneur, we hopefully rely upon their expertise, number one. Number two, the access to information is incredible these days, along with the ability to find, consultants and subject matter experts that, if there's a topic we don't know about, we feel fairly comfortable in our network ability to get to the root cause or root matter needing to de-risk that element. So it's a balancing act of letting the people that we're engaging with convince us of their expertise and of their ability to be honest and straightforward decision makers, along with our own internal due diligence, relying upon what information that we can get directly, and also making lots of phone calls and lots of outreach to various friends of ours, whether new or longstanding, to assess the opportunities.
Interesting. Yeah, I'm hearing just a lot of resourcefulness and getting the right folks and expertise and consultants. That in of itself is a heavy lift. Just hey, can I trust you and your expertise? And can I believe what you're talking about there? What you're pitching. So fascinating. I'm also thinking as you're having these conversations and folks are essentially kind of pitching, to your team. I mean, where the capital lies, the competitive space. Can you talk a little bit about, what your competitors look like? Are there other folks that, as they shop around, they're considering your firm or others? How do you differentiate yourself and what do you consider the competition? What does that look like, whether direct or indirect?
Sure. I mean, the market for investing capital is quite efficient really across the economy. I mean, there's obviously venture capital funds everywhere, there's private equity funds everywhere. There's also the strategic industry incumbents that are competitive. So it's not easy to differentiate very often, but we try to obviously present market based terms to the counterparties that we deal with. And very often it does come down just whether there's a personality fit and how we are sort of a value system aligned in our understanding of the business thesis at hand. And then most groups like myself, they try to be value added investors. And so when in all three of the partners on my team, we all have operating company experience, which means that we absolutely know that creating cash flow, revenue, and expenses, it's not easy every month. Okay, so we have a deep appreciation for what goes into business formation and earnings and creating sales and managing cost and those operational disciplines. I think that is a differentiator that we can really appreciate what people are saying and the hard work that goes into the daily activities. And that's where we try to be value added in giving the mentorship or advice that we can do for the people and the companies that we align with.
Yeah, the mentorship piece is key. As I talk to folks in my orbit that are in a similar space or have in private equity or venture capital, there's always that sort of healthy tension of the folks that are providing the capital and the mentorship and the insight and guidance, and how far entrenched do they get into the business, whether it's on the operational and management side, or is it a once in a blue moon executive meeting. Like where does Quintana lie in that spectrum? And is that on a sort of per investment basis? What does that look like, and how do you determine where you land in that spectrum of involvement?
Well, David, you asked some great questions. So we really, because we range from venture or development stage to acquisition, it really is fact dependent upon how sophisticated the team is, and where on the cycle that we choose to enter. So, a business called Great Northern Midstream was an idea that we formed ourselves, and so we literally built the organization out from myself and one other colleague into a few hundred people up in North Dakota. And so that was a very immersive experience for our team. But on the contrary, in fact, one of our Rice fellow alumni, Jay Helms, he ran a business called Frontier Utilities for us. In that case, Jay was a wonderful manager and had a good team, and was my role in that, and QID's role in that was really just to service and steward the board level, letting Jay and the team run everything very self-dependently. So you're absolutely correct that our involvement will just vary depending upon the needs of the idea and the maturation of the team in place.
Interesting. Yeah, I just in my mind, your everyday is never the same, right? It's just like a constant, sort of creative and flexing exercise, as these businesses grow and how you provide your help and mentorship and management. So fascinating.
Well, when I was a kid, the expression is, if you're not moving, you're killing grass. And so, I mean, that's part of life. And I mean, really going back to the Rice MBA program, the mentality as a smaller school was that the rigor of the curriculum was high, but intentionally high, so that the students really are forced to work hard. But at the same time, in all the team based activities, the work hard inevitably leads to play hard. And those 2 years of the full time program was just a great, educational bath in balancing, work hard, play hard, focus on the important things, and obviously enjoy it in that moment. And, I think this last year for me, we all chase the success, we chase the goals, we chase the ends of our activity set. And I think this past, COVID environment really has compelled us to focus on, the things that matter most, our family, our friends. Obviously, it's been just a tremendous challenge for everybody. And I work in small, middle-sized businesses, and it's just a really tough environment. But the point I'm making is, you have to be reminded that, being in the moment and enjoying the means or the activities is really what life's about.
Well said. And I definitely want to unpack a little bit more on that and the volunteer side of things we'll get to in a moment. But you picked the thought right off the top of my brain on the COVID side, and it's mid-December now, and we're wrapping up 2020. And I love your call out. And hey, this is what actually matters most. I think this year has been, if there ever was an excuse to maybe take a breather from business and focus on family and friends, this has been the year. and so and then to your point, with working with small and mid-sized businesses here in central Dallas, where I am, every other business just down the road has been shuttered up, from my view, in March and April. And it's just really sad to see. And so, in terms of your changing directions from the beginning of this year, I imagine that you had a plan for 2020, and then March hit, and then everything went belly up. It's kind of like Mike Tyson says that everyone has a plan until they get punched in the face. And so, so how did your plan, sort of, what is that delta from the plan to reality, as you started in January and now that you're wrapping up in December? Can you give us idea of the zigging and zagging that has happened, largely due to the pandemic?
Sure. I mean, my wife Laura refers to it as almost like a great pause where everything had to come to a stop. And, it's hard to make assessment of it all. But, I sort of try to handle the year by saying, look, this is going to be really hard. We have to learn to communicate and work as a team in a totally different manner than being face to face. And within energy, it's sort of the double effect of the OPEC plus, market share fight, dropping crude oil to record lows, along with the pandemic. And so it's just been, no one's going to hear you complain about it. So you have to just, pick up your boots and fight through the challenges. And we're still in them, quite frankly. But you got to do your best you can. And, the pieces will fall and you got to pick them up and put them back together, so to speak.
I wanted to go back to your comments around the downturn in oil and gas in 2015, and as that proceeds forward, and I'm myself, I'm not deep in that industry. I'm in big tech essentially, but I would be remiss to not call that out just because a lot of the folks at Rice or in Houston are in that space, and so I wanted to ask how much of your business and business success and your portfolio success is contingent on the macroeconomics of oil and gas and energy.
For QID itself, it's been mostly affected by the margin deterioration, with the revenue being tied to, in our case, propane, butane, and natural gasoline relative to natural gas as a cost of goods sold. So absolutely, we've been affected like many others. Now, as we assess that, look, the world is facing a very fascinating time with respect to how it wants to draw its energy and what resources to pull it from. And to consider the macro view, I mean, what a wonderful time to be a consumer with all the choices available now between distributed generation, between solar and wind options, of course, the fossil fuel industry. And so it's just a great moment in time. It's, of course, challenging to be in the oil and gas theater. But if you're one that wants to focus on the various new technologies or new what they call energy transition, it's a really exciting time to be, entering the business and or capitalizing projects. And I think, looking forward, there's so much talk really starting in Asia a couple years ago, and then also in the EU last year, and now finally the U.S. is really getting focused on the hydrogen economy, which has been probably a 5-decade thought, but it seems like there's getting more legs to it. Hydrogen essentially is a very dense energy form, but without the carbon. And so, with all the ESG interest in decarbonizing the economy, of course, hydrogen is going to be a key factor in that, along with carbon capture. And living in Houston and coming from the fossil industry, these are still ways that our city and our workforce here can try to take advantage of the pivoting that's happening amongst society for their energy needs.
Gosh, there's so much there. I was listening to Elon Musk on Wall Street Journal. I think it was last night he was being interviewed, and I think he's right next to Jeff Bezos in terms of the richest folks in the world. So seems like he has an ability to look around the corner in terms of where things are going. Obviously, with Tesla, there's a lot of impact there, and I love how you called out hydrogen and decarbonization and carbon capture. Again, I'm pretty lumping when it comes to, hey, what's going on in the federal space or regulatory space in terms of these topics and the transitions that you're talking about. How much of that do you research or as part of your due diligence? And I'm kind of asking kind of rhetorically, what does that look like for you, in terms of like a framework for research and due diligence and trying to peek around the corner from a, regulatory perspective?
Well, sure. I mean, in each vertical, as we call them, whether it's energy and power or data tech or industrial environmental, each vertical faces their own constraints as far as the regulatory backdrop. So you may know that the FCC just awarded, I think it's like $900 million per year for 10 years. So Elon Musk's SpaceX received $300 million of subsidies to go into the rural broadband fiber initiative that the federal government is kicking off. And so there's a lot of other smaller companies and middle-sized companies that are also going to get grants. And so we are paying particular attention to that area because, there's 30 million people in the U.S. that do not have, broadband access. And even worse, around the world, it's even worse than that. So these regulatory activities we do pay attention to very closely, and we tactically try to assess how we can work with that within energy and power. Absolutely, the city of Houston's concerned that Biden might want to regulate fracking, for example. Now, those are things that we can't assess quite yet, but the reality is we need all forms of energy. And yet, my fundamental view is that I kind of want the market to decide what the lowest cost solutions are for providing that energy and power for the consumer's needs. And if consumers want carbon free, there's ways to get them carbon free. And we as a society and the markets should address that I think, in the least cost options that we can. So you're right. We do assess the political theater, the regulatory theater, and it's a fascinating time to be investing really across the economy, given all the changes happening.
I'd heard Elon talk about what you had just mentioned with the FCC and the incentives for the fiber initiative, and so it's quite fortuitous we're talking about that right now. There was a conversation around how to price in carbon. So when you talk about the market deciding, what's the lowest cost option, there has to be consideration, shouldn't there? And forgive me if I'm being obtuse, for pricing in negative externalities, such namely carbon, which is on the docket here. So, is that even possible to do, such that the free market, air quotes, free market, can decide on what that lowest cost option is?
Well, I mean, I think the way that it seems like the industry is getting support is a carbon tax, which is a way to just say, here's the value or the requirement for a cost if you're going to emit carbon or your energy inputs across whatever consumer goods that you're creating. So, how that price will be set is going to be fascinating. And there is already, within the federal government here in the US, there's already essentially a tax credit for sequestering carbon. But the rules of engagement have not necessarily been clarified where the industry can really take the tax credit and try to roll it forward into infrastructure projects. So I can't opine exactly how the feds are going to come down on what the tax should look like, nor do I know necessarily if the carbon tax will be the most effective means of doing it. But because it would be essentially a tax burden across all of the consumers, whether they're making widgets or providing fuels for road transport or electricity, it is one way that can blanket and compel people to either pay the tax, or if they're conducting businesses that are carbon free, then they get the benefit of providing credits against that.
Fascinating topic. That could go way deep into the rabbit hole. So I appreciate your definitely handling that one. Last sort of business centric one, and then we can talk about maybe more on the board side, the volunteer side. Is there, in terms of a successful investment that you're the most proud of? Is there a story there that you'd like to share, that might be a highlight reel moment in QID's ongoing saga that you'd like to share?
Well, the most local is probably a business that we bought with a partner, Jay Helms, a Rice grad himself, called Frontier Utilities. It's here, a Texas retail energy provider, which is essentially buying wholesale power and reselling it to retail customers. And we were really happy that we bought the business in 2012 with 8,500 customers. In about 7 years, we had built up over 120,000 customers, and we're fortunate to sell the business to an affiliate of NextEra. So we had a workforce of around 80 people. So we very much expanded deployment, and had a very dedicated team of people. We internalized the call center, mostly here in Houston, but did outsource some to other jurisdictions. But it was a lot of pride to work with another Rice MBA, person, and to start something small and grow it, and then successfully exit for ourselves and our partners. So we do have bumps and bruises along the way, but who wants to hear about that stuff? Well, I was taught that wisdom is accumulation of scar tissue, and I assure you, I've got a lot of scar tissue doing what we're doing.
I can understand or appreciate that. Well, to maybe land on the last one or two topics here, the boards that you serve on, maybe if you wanted to zone in on one, and maybe the higher level question is, how do you decide to spend your time on which boards, and then what is that governance look like for you as a member of those boards?
Sure. Well, so for me, the Spirit Golf Association is a 501(c)(3) that provides access to Whispering Pines Golf Club, which is truly owned by my father. So there is a family connection to that. But the Spirit Golf Association really is there's three mission statements. One, access to the golf course. Two is to conduct the Spirit International Golf Championship, which is an amateur event that we hold every other year. And really, really pleased that for now 20 years, we've really hatched tons of alumni that have gone on to be professional golfers on both the PGA and, more importantly, the LPGA tours. So my father had a vision to essentially do an amateur event back in 2001, was the first one of bringing young men and women together in a joint tournament amongst 24 different countries. And it's just been a really, really fun project for the SGA to sustain that tournament. And the third part of the mission is to give money to charity, mostly concentrating on healthcare causes, which has been really a multi generational focus of my family. And so, yes, it's a great golf course that my father built, but more importantly, it's really a nexus of the things that he is passionate for, which is amateur sports, healthcare needs, and having a tournament that reaches every continent in the world, and trying to bring people together to really forge relationships that can stand the test of time. We had 10 of the alumni on the guys' side and 10 come back from the girls' side last year. And you'd be amazed at the bonding that those players had as young people and have sustained throughout their career. And we can't measure exactly the impact that we had, but when you bring people together from around the world, it really is a fun experience. And, you know, to boot, raising money for healthcare causes is really, really rewarding. So that's the Spirit Golf Association. It is a family connection, but watching my father and trying to carry the torch, perhaps going into the future, that's something that we're really, really proud of, is that tournament and trying to give money to charity.
Well, the last two quick ones I have for you, we'll adjourn here. I always love to do the LinkedIn stalking, and it's interesting to see what people write, and maybe they forget about it, like years later. But I couldn't help but noticing you wrote down "Jack of all trades in the outdoors, master of none." What does that mean?
Well, look, I love. I mean, when I'm not working, and if I have free time, I love being outside, whether it's hiking a trail or playing sports with the kids, fishing, hunting. Um, I like all things outdoors. So if I have a chance to get out, that's what I want to be doing.
And then offline, you had also mentioned a venture around the corner. I'm not sure if you're still open to sharing that in the mobile application space. Is that something you want to do a slight reveal on right now?
Sure, I'll have you know that I've launched a mobile game called Ultimate Golf, and it's really the ambition is to really provide entertainment through a game that's providing real course experiences in a mobile environment. Um, and ultimately, it is a for-profit venture, but for me, it's an exciting sort of thing. It's kind of my night job, so to speak. I've got a team of developers in Orlando that we're working with for developing it, called Hype Games. And then the publisher is based in the EU, called MiniClip. And so it's really a tri-party relationship of building, and we launched the game a few months ago, back in the summer, and we're really pleased with the outcome. So I'm hoping some friends will download it, and hoping that maybe we can provide an immersive experience for other brands and other golf industry incumbents.
Well, I really appreciate it. We covered a lot of ground here, as I want to do. So thank you for definitely handling the questions I tossed your way, and for revealing, just tons of good info about your business, your board experience, and your other ventures as well. So thank you for your time. Thank you for contributing and having a conversation with the broader Rice Business alumni. I've really enjoyed this time with you.
Well, David, it's been a pleasure knowing you just for the last few weeks. And, when I got the call, it's just such a reminder of how good the Rice MBA program is in building, people like yourself that are just super energized and want to give back to the school. I love the school and think it's, obviously it's the best entrepreneurial program in the country. And, it's just a reminder when you guys outreach me that I'd love to get back to the school. And so thank you, David.
Thank you, Will. All right. And for folks listening, thank you for tuning in to I'll Have You Know. And remember, if you're not moving, you're killing grass. Happy holidays, everyone. Thanks, Will, and take care, everyone.
This has been I'll Have You Know. Thanks for listening. You can find links and more information about our guests, hosts, and announcements on our website, business.rice.edu. Please subscribe to this podcast wherever you find your favorite podcasts and leave us a comment while you're at it and let us know what you think. I'll Have You Know is a production of Rice Business and is sponsored by the Rice Business Alumni Board. The hosts of I'll Have You Know are myself, Christine Dobbin, and David Druglever.